Alan Hibbard's with us, precious metals alternative money specialist at GoldSilver.com. Alan, good to have you here. Welcome. And in a timely fashion at that, talk to us a little bit about what we're seeing in terms of geopolitical tensions, some of the unease out there, supporting gold prices, and then we can dive a little bit more into some of the specific fundamentals.
Yeah, Ben, thanks for having me. So as you say, there is geopolitical tension. There is uncertainty in just about every part of the economy. And we saw it, for example, on the Republican side with Trump. We're seeing on the Democratic side with Biden. And that's sort of a proxy for what's happening globally. There is so much uncertainty. We've also seen it with the rise of the BRICS Union as opposed to NATO. And, of course, the economy and the military are closely connected. So there is so much uncertainty in the world, and I think investors are picking up on that. Central banks in particular, they used to be net sellers of gold for about 35 or 36 years. Now they're net buyers. And in the case of silver, you mentioned it is lagging a little bit, but that is starting to pick up, and we are seeing a structural deficit. So investors, I think, are grabbing onto something that they can feel and they can understand themselves, and that's physical gold and silver.
I feel like yields coming off has helped gold, right? As the dollars come off ultimately, we oftentimes do see that kind of counter, that difference between the two, or that inverse correlation. I was kind of struggling to get that out. But then ultimately, I feel like yields coming off has kind of weighed on silver because it has been also tied to some of the concerns associated with the economy, and it tying in, silver that is tying into the industrial aspect.
Yeah, exactly. So silver is primarily an industrial metal. The majority of the silver that's mined and recycled is used in industry, not for money. However, with demand growing so much for silver, for everything from photovoltaics to consumer electronics, EVs, everything like that, demand is rising year over year for silver. However, supply is actually falling. And we've been in a situation like that for 3.5, almost 4 years now. And it's only a matter of time before the price goes vertical in order to catch up to this structural deficit.
Well, kind of what we were talking about in terms of this longer-term trend, again, looking for these buy opportunities to participate in, or at least areas to watch and kind of understand price activity a little bit better, a little bit deeper. And this is, again, one of those areas where we want to have heightened awareness tied towards silver and gold, for that matter, one could argue, having seen the recent breakout last week. But let's talk about a little bit more about some of those current supply trends, because that's been one of the themes that our guests have been talking a lot about, right? And how that lack of supply ultimately is not something that we can change immediately. There's no switch to flip. It's going to take years to kind of get that side of things to catch up to the demand narrative.
Yeah, exactly. This is something that does take years to correct. It's not months. So I would expect this situation to exist for a few more years. And the majority of silver that we mine doesn't come from dedicated silver mines. It actually comes as a byproduct for other from other mines like gold, nickel, copper, and so forth. And so you can't just say, oh, here's a silver mine, let me all of a sudden double the quantity of silver that we have. We have to sort of let that take shape from other mines around the world. That will take years. How
about some of the demand themes you're seeing, trends? Because again, we talk about trend in terms of price activity, the technicals, and what I pointed out as far as the charts. But we also talk about the fundamentals and the themes there. Again, lack of supply ultimately. But as far as the demand side of things, you mentioned EV and some of the driving forces there. But talk to us a little bit more about some of those trends you're seeing as far as the demand side.
Yeah, exactly. So anything related to the green economy, anything renewable, all these different forms of alternative energy, they have a huge demand for silver. Anything used in electronics, consumer electronics, large electronics, small electronics, everything uses silver. Silver is the most electrically conductive element on the periodic table. So there's silver used in absolutely everything. And because of that structural deficit that we're seeing, those large silver stockpiles that have been accumulated over the previous few decades are now dwindling in order to be able to build the goods and services, or the goods rather, that we use. So all these trends for electronics and for renewable energy sources, that all is going to use all those silver stockpile. So it's only a matter of time before we start running out of that silver. I mean, we have a few years still. I mean, it's not going to be a problem yet, but the price is going to have to go up to adjust. It's really just an issue of supply and demand.
So in terms of all this kind of taken into consideration, these themes, these trends we're seeing right now, the driving forces behind some of the price activity, where do some of these opportunities lie right now, sort of taking advantage of this, right? Is it outright futures ultimately? We've heard about some of the other products that are going to fall under kind of this umbrella of, again, lack of supply, increased demand in the coming years. Copper, for example. I mean, where do the opportunities lie to try and take advantage of some of these current trends, these existing themes?
Yeah, it's a great question. And first of all, I can't give investment advice per se, but what I can say is that I think it makes a lot of sense for investors to start with an allocation to physical gold and physical silver.
Okay.
And then after that, it makes sense to go into the futures market or do anything that's paper related. But really, the bread and butter of an investor portfolio should be holding gold and silver. And a long time ago, when those were legal tender and the only form of official money, that's what everybody held, and everyone was protected against inflation. Now we're in a situation where not everybody owns gold and silver, so they have to worry about inflation. It's something they think about, it's something they talk about. But you can really make yourself immune to inflation by holding physical gold and silver. And then after that, if you want to speculate on futures or leveraged ETFs or anything like that, that's going to be a case-by-case basis and only invest what you're willing to lose.
I like that. So the idea of being the basic allocation kind of supportive of, you could take advantage of some of these longer-term trends that we've been seeing, but also, again, some of the opportunities here that lie within, as far as taking advantage of some of the shorter-term possibilities that play out, and also opening up the door. I like the idea of just some diversification also in terms of your portfolio.
Yeah, absolutely. I do think diversification is super important, and it's usually a defensive strategy.
Yeah.
And so for having gold and silver, they're uncorrelated assets. So the 60-40 portfolio of stocks and bonds hasn't really held up lately. So maybe in place of bonds, investors might be looking for something else. Gold and silver would perform a great role there. So that's diversification. But we're also in an interesting period now where gold and silver actually provide offense as well, not just defense. So there is a really nice capital gains play available. And if we look at something like the Dow gold ratio, comparing stocks to gold over the long term, we see capital flow back and forth roughly every 20 or 30 years. And we're in a situation now where the Dow gold ratio is up around 16. Historically, it's about an 8 on average. So if it reverts to the mean, that suggests that gold might outperform the Dow or stocks in general by a factor of 2 over the next few years. So that could be great offense for a portfolio in addition to the diversification defensive move.
Yikes, I'm thinking about that and kind of wondering what would be the fundamentals, what would be the catalyst that would bring that about. A spike in gold to that extent, I would imagine there'd be some turmoil associated with it, wherever it was. Appreciate you joining us here. You've given us lots to keep an eye on in the coming weeks, months, and even longer, further out than that. Alan Hibbard, look forward to having you back. Alan, ladies and gentlemen, precious metals alternative money specialist at GoldSilver.com. I want to dive